You know, sometimes the markets don't need excitement. What they actually need is a reset. This is Bitcoin on Point, where I give you the only news that matters and the cleanest technical analysis to trade the best asset in the world, Bitcoin. And Bitcoin is currently sitting in a zone where fear is dominating the narrative. But structurally speaking, this is where markets tend to reset, not initially break. And right now, both the macro data and the charts are pointing to the same story. And at the same time, the next trade is already preparing inside my $10,000 to $100,000 live trading challenge. I don't chase moves, guys. I wait for structure and I document everything live. All of these details, updates, and executions are shared in my Telegram channel, and the link for that is in the description. But before we go deeper into the charts, let's zoom out to our macro backdrop, which continues to strengthen. JP Morgan CFO Jeremy Barnum warns yield-bearing stablecoins risk creating a dangerous parallel banking system without traditional regulatory safeguards. And this tells us two things. Regulation is coming, and this isn't speculation. The system is actively being stress tested. Now, when banks start talking about risk containment, it usually means rules are catching up to the reality. Now, let's talk about Bitcoin open interest, a deleveraging signal as BTC OI drops by 31%. Historically, they have marked significant bottoms, effectively resetting the market and creating a stronger base for a potential bullish recovery. So why does this signal effective resets in the market? Because it typically means that leverage is getting flushed, weak hands are exiting, and the market is resetting within a stronger base. Now, as Darknote has noted, this type of deleveraging often creates the foundation for the next bullish recovery. Now, let's talk about ETF inflows, because capital is still coming in. ETF flows. Bitcoin, Ethereum, Solana, and XRP spot ETFs saw net inflows on January the 13th. Bitcoin was at 753 million, ETH 129 million, Solana at 5 million, and XRP at $12.98 million. Now, this matters because leverage again is leaving and capital is entering the space. This isn't distribution, this is rotation. So when you connect these dots, regulatory pressure is being formalized, leverage is being completely flushed out, and spot demand is still stepping in. This isn't chaos, this is market repair. Now let's bring this back to the charts, and we're going to look at the Bitcoin DCA setup, where we have multiple zones that signify buying the fear, because every time Bitcoin has come back down into territories during previous corrections in this bull market, this is where historically foundations are built and Bitcoin continues its expansion. And we are in a very similar buy the fear territory as of today. And every time Bitcoin trades in this zone, it doesn't remain here for a long period of time. This isn't about timing the tops, but it is about recognizing where long-term risk becomes asymmetric. Because of these historic repeats, we're doing exactly what we've done in the past, and this is where we should be buying the fear. Now, zooming into the daily time frame, we're going to analyze the 90K reaction and where we've actually taken the buy side liquidity. So in the previous updates, we had these previous daily highs of around 92K and also these previous daily lows, which sat down at 89K. And we had a very important focal point, which was $90,000, where we needed to see Bitcoin initially turn this into support, because this area was a major level of resistance on the daily time frame throughout December. And as of the last couple of days, Bitcoin has come back down into this $90,000 level and has actually turned it into support. And this is where we are seeing a significant bounce, where we've taken out the previous local highs from the sort of 5th of January at $93,000, and Bitcoin has pumped up to 95K. We have seen the highest daily close since mid to late November for Bitcoin. This is a fantastic sign, and we have currently swept above our previous level of supply. So $94,000 was a major level that Bitcoin needed to break through. We do have the potential here to turn this into support moving forward to look for the continuation. Failing that, we do have the $90,000 area that is now a current level of support to monitor. Now, on the 4-hour time frame, Bitcoin has re-entered into its supply zone. We have this major sort of bearish order block which sits at $94,000 to $95,000, and price action is currently consolidating within this range. In yesterday's video, we spoke about a push up into this supply, turning it into support, and then looking for the continuation of the trend. So if Bitcoin can come down and turn the first previous point of resistance on supply, which was a failure, and rehold this as support, then this is where we could see the continuation of the trend higher towards sort of maybe the high 90 to low 100K territory. But it's all about holding the $94,000 previous high, which was the fail, as support. Now, it's pretty simple to break down. We had a major level of consolidation. We broke above that 90,000, and this was what we was analyzing on the daily time frame, these 90K previous levels of resistance. Bitcoin initially broke through that $90,000 level on the 4th of January. It then ran into the supply, which has been multiple points of contact in the past as resistance. We corrected back down into the consolidation, turned the 90K into support, got the re-entry, and have now seen the push into that supply. So this is how critically important it is to hold this level of support to look for the continuation higher. So price either pushes through the supply or we resort back down and get a controlled retracement. But both outcomes are constructive, and the structure here is what matters most. Bitcoin is trying to break through its 95K supply that it's been under since December. Now, before we talk about Ethereum, just a quick update on our trading challenge, where I'm publicly taking a $10,000 account to $100,000 fully transparent. And we've already executed our first trade on TON. We've done this on the 15-minute time frame. We had an entry price at $1.74 and a take profit price at $1.77. And you can see that this trade was successful and reached our TP2 point. So we are executing these trades. We are doing them live. We are not forcing it. We're letting the structure confirm. All of these trades are available on my free Telegram channel, where we give entries, exits, and the full reasoning. The link for that is in the description below. You can also find the link for this Profits Precision platform, where every single trade is monitored live on a very precise dashboard. The link for that is also below in the description. Now let's shift over to Ethereum, and looking at ETH on the daily time frame, we had this compression between a triangle with a level of support, a level of resistance. ETH really squeezed into this compression, and we've seen a breakout that could determine a new trend. Now, after securing this breakout, we did see a rally into supply at $3,300. We came back down to the triangle resistance, turned it into support for a few days, and now ETH has seen another breakout towards $3,300. So price has been pushed higher again from the same exact level that was holding as a previous level of support before, telling us that demand doesn't disappear or didn't disappear. It actually waited, and this is where the reaction has come into fruition. So on the 4-hour chart, this breaks it down perfectly, because the extensive move has played out as we discussed yesterday. We had the $3,180 high that was a target and needed to be broken through, which is the supply zone from the previous highs of sort of on the 8th of January. And ETH has blasted through this level. And this is why the levels actually matter. Because if you prepare first, then we simply wait for the price to confirm. And we've seen that push up and actually have taken out the previous high of $3,300, where we could be looking to hold this as a level of support. If ETH does reject from these sort of levels, just simply look for the previous highs that we've actually broken from at 3.18K that could act as a major level of support moving forward for another successful bounce or continuation of the trend. There is still the possibility that we could turn this previous high at 3.3K into support, but this does mean holding inside this support block that we have on the charts, and we are sitting just below it. So when we zoom out for the whole of this content, BTC Weekly says a buy the fear DCA zone that has signaled continuations on all of these prior corrections. The 90k reaction on the daily time frame has been fantastic. Holding this previous level of 94k now would be ultimate for the continuation of the trend. Failing that, 90k is still the level that we would need to hold for the continuation moving forward. On the 4-hour time frame, we are tapping into that 94 to 95k supply, a critical moment in time for Bitcoin to either reclaim this level for continuation or to resort back to that 90k territory. On the daily, for Ethereum, buyers are defending the key levels after we have seen push-ups from a previous level of support, resistance that is now support. And on the 4-hour, ETH is respecting its order block, has broken out of the 3.18k high and now has the opportunity to turn 3.3k into support, with further support waiting below if that fails. This isn't hype, guys. This is resetting structure. And to take away from the video, this is where leverage resets the markets, capital builds the trends, and once again, the chart is doing what it always does. Until next time, take care. All of the best.